Hello, friends. Good morning to all of you and welcome back. Let me introduce myself. I'm Amit Jain. So, today we are going to have a session on IND-AS 103, a business combination standard. Right, guys? So, before starting this standard, I will provide you some sort of insights about this standard. IND-AS 103 is a business combination standard. In this particular standard, we will be talking about the combination of two or more of the business. That means if one entity acquires another entity, if one entities merge another entity, if one entities amalgamate into another entity, then what is the accounting principles we need to have, how to do the accounting of those merger, how to do the accounting of those amalgamation, how to do the accounting of those acquisition in the books of accounts of the company who is following Ind-AS accounting. Right, guys? So this is a very important standard, guys, business combination, right? Not only from the exam perspective, but also from the practical perspective, right? In India, in the globe, we keep on having an acquisition. Companies keep on acquiring other companies, companies keep on investing into the other companies. Very recently, you guys must have read that the PVR and Inox are going for a merger, right? PVR and Inox, they are going for a merger. This is a very recent merger, which is going to happen, and very recent news, right? So after this acquisition, we will have a one of the biggest supply chain, or I would say one of the biggest screen chain which is available in India, right? So business combination is very critical both from the exam perspective as well as the practical perspective, because mergers, acquisition, amalgamation keeps on happening in the world, right, guys? Okay, so in this standard business combination IND-AS 103, what we are going to discuss, we are going to discuss couple of things. Let's understand in this particular standard or chapter what we are going to discuss. Let me write. So what is the agenda of this standard? As the name suggests, one is the business combination, right? So one point is business and the second point is business combination. So first of all, in this particular standard, guys, we need to understand what is business. What is business, right? We all know what is business. We all have some understanding what a business, but this standard, this chapter is going to tell us about what is business. So that means we have something new to understand. We have something new to learn in this standard. So this is the first standard in which we are going to learn what is business, right? Then what? Then we will understand what is business combination. Correct? So one is what is business, second is what is business combination, right? Then we need to understand what is asset acquisition, right? What is asset acquisition? It may possible that I have acquired a land. It may possible that I have acquired a company who is only having a land. So the only point is whether I have acquired a business or whether I have acquired an asset. So the accounting of both the business combination and the accounting of asset acquisition is both different, right? Okay. Fourth is different methods of accounting of business combination. So we need to understand what are the different methods of accounting of the business combination, right? Then we need to understand purchase method of accounting, purchase method or acquisition method of accounting. Right? Purchase method or acquisition method of accounting. Within the purchase method, we need to understand lots of things. Within the purchase method, we need to understand lots of things. For example, we need to understand the purchase consideration. Right? We need to understand the acquisition of assets and liabilities. Liabilities acquired, right? We need to understand the accounting of NCI acquired. Accounting of NCI, non-controlling interest. Correct? I hope you understand what is NCI. It is minority shareholders. Nothing else. It is minority shareholders. Then we need to understand intangible assets. Right? Certain intangible needs to be recognized in the acquisition accounting. We need to understand. Then we need to understand goodwill. Goodwill, very critical aspect. Goodwill or bargain purchase gain. Correct? Then within this acquisition accounting, we need to understand what is my contingent consideration. What is my contingent consideration? So consideration can be contingent. What is contingent? Which is dependent on the occurrence and the non-occurrence of any future event. Right? Then we need to understand, for example, reacquired rights. Right? We need to understand ESOP accounting as well. Right? So there are many concepts within the purchase method accounting, with the purchase method or the acquisition method accounting. Right? I would say this is the method number 1, A. Right? Then we have 6B. Then we have 6 point and the B method. B method is common control. Common control method of accounting. Right? What is common control? Transaction within the group. Transaction within the group. Right? So in this case, what we need to understand? We need to understand pooling of interest method. Pooling of interest method. Capital reserve accounting. Identity of reserves. Correct? So all these things needs to be understand in respect of common control method of accounting. Right, guys? So largely we are going to discuss these many things in the business combination standard. So first is business. What is business? What is business combination? Asset acquisition. And we will also be talking about the difference between these two. Difference between business combination and asset acquisition. Correct? Then we will talking about in respect of the different methods. One is the purchase method and the second one is the common control method. Purchase method is what is purchase method? Purchase method is nothing but a third party acquisition. Third party acquisition. Correct? In the purchase method, we are going to discuss purchase consideration, assets acquired, liability assumed, accounting of NCI, intangible asset, goodwill, bargain purchase gain, contingent consideration, reacquired rights, ESOP accounting. Correct? And in the common control, we are going to discuss all these items: pooling of interest method, capital reserve, identity of the reserves. So these many things we are going to talk about under Ind AS 103. Any doubt, guys, as of now? Any doubt, guys? And let's keep interacting with me, guys, through the chat box provided by ICI, right? So that I can understand where you are struggling. in terms of understanding the concepts. Only Manikanta has raised a point. Good morning. Good morning, Manikanta. What about others? I hope you guys are attending the session. Should we move on? Okay. Now we are talking about business combination, right? We are talking about business combination here. Correct? Okay. So people are saying Manikanta has raised a question. Goodwill comes under intangible. Okay. So she is asking whether goodwill comes under intangible. Goodwill is intangible, there is no doubt, right? But what we are going to say here is when we are doing a business combination, right? When we are doing any business combination, what is my principle? Let's say I give you a simple example. A Limited and this is B Limited, correct? Sorry. A Limited and this is B Limited, correct? A Limited acquired B Limited. Acquired B Limited at 100 crore rupees. 100 crore rupees, right? And the B Limited is having a net asset amounting to 80 crores, right? So here we are talking about the accounting in the books of A Limited in the business combination. In this standard, we will be talking about the accounting in the books of A Limited, books of acquirer. So A Limited is the acquirer, right? And B Limited is the acquiree, right? Or what we can say, what else we can say? B Limited is the transferor. B Limited is transferor and A Limited is transferee. Right? So here we will be talking about in the books of A Limited who is acquiring a business in the books of acquirer. Right? So what we say that in the books of A Limited, purchase consideration which has been agreed at 100 crores minus net assets acquired. Net assets acquired. What is the value? 80 crores. Right? So that means in this example, the value of net asset is 80 crore rupees, but A Limited has ended up paying 20 crore rupees extra. Right? A Limited has paid 20 crore rupees extra in order to acquire net assets. Net assets includes, net asset means, net asset includes, for example, trade receivable, fixed assets, current assets, plus other assets, right? Minus current liabilities, minus long-term liabilities. This is net is called net assets. Correct? So what is happening in this example? The value of the net asset is 80 crore rupees. The value of all these assets and liabilities is 80 crore rupees. But A Limited has ended up paying 100 crore rupees. Why A Limited has paid 20 crore rupees extra? Why A Limited has paid 20 crore rupees extra? That 20 crore rupees will be termed as goodwill. Right? So guys, whenever we will be talking about business combination, whenever you heard that one entity has acquired another entity, what comes to my mind? What comes to our mind? Our mind is that we need to record a goodwill. Right? Business combination meaning is goodwill. Whenever a company acquires another company, we need to think, we need to evaluate from that perspective that whether that acquirer has recognized a goodwill or not. Right? What is the basis of computation of the goodwill? Very simple. How much amount I have paid, which is purchase consideration, what net assets I have acquired, that I need to account for as a net asset acquired, and this is my goodwill. What is the accounting entry which a company should pass? What is the journal accounting entry which a company should pass? A company should say, I have received an assets, right? Individual assets of rupees, let's say 95 crores, right? Two liabilities which I have acquired, let's say 15 crore rupees, right? The net of this is nothing but an 80 crores. Let me put here as well. This 80 crore has a breakup like assets 95 crores, liabilities 15 crores, net is 80 crores, right? So asset debit, liability debit to what? To purchase consideration. Purchase consideration is 100 crores, right? And goodwill is 20 crores, right? So now Manikanta has raised a question, sir, what about goodwill and intangible? Are these one and the same thing? So goodwill is nothing but a part of the intangible itself, right? There is no doubt, Manikanta, in this. But here what we are talking about, intangible, it may possible that within this goodwill, which 20 crore rupees we are recognizing here is, standard is also saying that it may possible that the other company has not recognized some intangibles. Why other company has not recognized? Because it is not allowed to be recognized. For example, internally generated brand, internally generated customer list, right? Those assets are not supposed to be recognized as per the relevant accounting standards. Right now, at the time of business combination, standard is saying that you have paid 20 crore rupees extra. Why you have paid 20 crore rupees extra? This is not all about the goodwill. It may also possible that you have acquired a brand name of the other company. It may also possible you have acquired the customer list of the other company, right? So standard is saying recognize intangible and finally recognize goodwill. So in this case, when we keep on moving in the standard, we understand what are the different types of intangible we need to recognize in case of business combination. Correct? I hope this is clear. Manikanta, is this clear? I have just given you an example that what we are going to talk about. Okay. Now, guys, when we are saying business combination, right? One thing comes to our mind, as I was saying, one thing comes to our mind, business combination means goodwill. Or let me give you another example. Business combination, right? I will also explain what is business combination, but I'm just provide you a practical insight. What is the meaning of business combination? For example, if I say assets, right, fixed assets, what comes to our mind? What comes to our mind is land, building, plant and machinery, computer, fixtures, office equipments, right? These things comes to our mind. When we are saying business combination, what should come to our mind? The things which should come to our mind is goodwill, right? That is what I'm trying to say. How the goodwill needs to be computed? Goodwill is very simple. Purchase consideration minus net assets is equal to my goodwill, right? Example, we have taken 100 crores, 80 crores, right? And this is my goodwill. Now it may possible, my dear friend, it may possible that I have incurred a gain in this example or practical scenario. If let's say purchase consideration, I'm paying 100 crore rupees, right? And I'm acquiring a net assets at a value of 130 crores. Correct? That means I have a negative number here, 30 crore rupees. This 30 crore rupees is nothing but a capital reserve, right? And under business combination, this capital reserve is termed as bargain purchase gain. right? In business combination, we used to name it like this: bargain purchase gain, right? Because we have grown up, we are learning Ind AS, so the standard is saying capital reserve is an old word. Use these words, right? So we need to use bargain purchase gain in respect of capital reserve, correct? And this will be recognized directly in as a part of reserve. To be recognized, where this needs to be recognized? To be recognized in reserve and surplus, correct? So if it is a positive case, then it is a case of goodwill. If it is a negative case, then it is a case of bargain purchase gain, right? Okay. Are we guys clear with these basic principles? Whenever I am repeating again, whenever we will be talking about business combination, what should come to our mind? Goodwill or bargain purchase gain. Correct, guys? Okay. Now let's talk about the different scenario of a business combination. What is possible in case of business combination? How it operates actually, right? How it operates. Scenarios of business combination, right? Scenarios of business combination. First scenario. Acquisition of one or more business. Okay. Manjunath is saying, sir, we learned amalgamation in IPCC. So my doubt is, in final, what are the areas which is extended and expectation from us? Okay. Very good question. And I would say, Manjunath, you have correlated your final standard CA final standard Ind AS 103 with your inter AS 14. Very good question she has raised. So AS 14 only talks about the amalgamation, right? The basic difference between the amalgamation and Ind AS 103 business combination is amalgamation only talks about the merger of one or more two entities. That's it, right? It's talk about the merger, right? But here we are not only talking about merger. Here we are talking about something more than a merger. Every time I'm not doing a merger, it may possible that I have acquired a stake in a company, right? So it's important to understand what I'm explaining here is what are the different scenario of business combination. Then after this, we will come back to AS 14 of Indian GAAP, right? I hope everybody understand what is AS 14 under Indian GAAP, which you have read in IPCC or Inter. So here, let's come back and what we are talking about, acquisition of one or more of the business. Acquisition of one or more of the business, guys, right? What does it mean? Let's say A Limited. This is B Limited. Now B Limited is having multiple businesses. Multiple business 1, business 2, business 3, and business 4. Manikant has raised a question. Sir, you take SBP cash flow consolidation. I want to learn from you, sir. Thank you so much, Manikanta, for your feedback. Let me see if it's possible, then definitely. Okay. So business. So right, let's say B is into the different businesses, right? What are the different businesses? Business 1, 2, 3. It may possible this is a real estate business, right? It may possible this is a trading business. It may possible that this is what? This is service business, right? And business 4, it's let's say mining business, right? So B Limited is dealing with the 4 business. It's a diversified portfolio which B is having, right? Now in this case, A Limited only acquires the real estate business of B Limited. Only acquires the real estate business of B Limited, let's say at 100 crores rupees, right? So this is the only legal entity. This is the only one legal entity. One legal entity is having multiple for business, and A Limited is acquiring a real estate business. This is a case of acquisition of one or more of the businesses. If A Limited is acquiring real estate business, it's an acquisition of one business. If A Limited is acquiring, let's say, mining business as well, then it becomes the acquisition of one or more business, right? So A Limited will acquire, it may possible A Limited will acquire more business, it may possible A Limited will acquire one business, right? So this may be a first scenario where we are saying one company is acquiring either one business or multiple business of the another company, but A Limited is not acquiring an entity. A Limited is not acquiring an entity. Correct? This is the first example. Let's talk about another example. Acquisition of controlling stake. Acquisition of controlling stake in other company. Right? Acquisition of controlling stake. What is controlling? Guys, tell me what is controlling? What is the meaning of control here? Controlling means power to control other company. Power to control other company through board of directors, or there are various means, I would say, through board of directors, control over relevant activities, right? Holding more than 50% stake in other company, right? Participation of financial and operating decision making of company, having potential voting rights, and there are multiple things, right? So controlling means what? It's not only about 51% stake. It's all about that we have the power to control the company or not, right? If let's say the company is having 5 directors and I am having, and I have appointed 4 directors in the company. That means I have a power to control, to govern to control and take the decisions of the company by using my directors, right? So board of director representation is important. Control over the relevant activities. What is relevant activities? Key activities. If I have the control over the relevant activities of the company, right? What is relevant? Maybe, for example, deciding the selling price of the company's product, deciding the customers, deciding the vendors, deciding the suppliers, right? Key decisions making activities. If I am having those rights, that is called relevant activities. Holding more than 50% stake is another indicator that I have a power to control. Participation in the financial and the operating decision making of the company. Having potential voting rights. What is potential voting rights? That today I'm having a 100% debenture, 10% debenture, which is going to be converted into the equity shares of the company. So in future, I will be having the voting rights by conversion of debenture into an equity, right? So it's not only about percentage stake. It's a matter of evaluation of all these matters. Let me write here, evaluation of, or a combination of all these matters. Which standards provides the guidance of the controlling? Is it Ind AS 103? No, it is which standard, guys? Can you tell me which standard? Ind AS 110. Right? So what we have done, we are saying in case of business acquisition, if I am acquiring more than 50% stake in another company, it may possible that I am acquiring a control in the company, but the evaluation of these factors needs to be evaluated, right? What can be the example of this scenario? A Limited and this is B Limited, right? A Limited has acquired, let's say 80% stake in B Limited at for rupees 100 crores, right? So when A Limited has acquired 80% stake in B Limited, it is an indicator that A Limited is acquiring a control. 80% stake is an indicator. This is an indicator of acquiring control, right? But other factors needs to be evaluated as well. Other factors needs to be evaluated. Correct, guys? So this is another example which we are talking about, acquisition of the controlling stake. In other company, right? This is the small example to understand this transaction. Okay, what could be the another scenario? Third scenario. First, we have talked about. Okay, Sheena Jain are saying, sir, all the above points are or and condition or condition. So she is asking, sir, either or concept है और ये सारी condition हमें verify करनी है. What I have written, Sheena, what I have written, combination. There is no and or. It's a combination. It's a joint evaluation. It may possible in one transaction I will have only 3 rights. In another transaction, it may possible I have 5 rights. It is not a case of either this or this. It's a combination of all these matters which we need to evaluate. Correct? Combination. Okay. What can be the third scenario? Third scenario, first we have talked about acquisition of the business, either one or more businesses. Where is that? Either one or more of the businesses. Second, we have talked about acquisition of the controlling stake. The third scenario would be merger or amalgamation. Amalgamation of one or more business or entity, right? Merger or amalgamation. What is merger or amalgamation? It means one entity cease to exist, right? One entity cease to exist. right? It may possible that I am acquiring a business, I am merging a entity as well, right? What can be the example? Let's say A Limited, B Limited, or this is B Limited, and within B there is a legal entity called C Limited. It's a legal entity, right? B Limited is also a legal entity, correct? Now in this case, A Limited is acquiring C Limited at rupees 100 crores from B Limited. Second, A Limited merges C Limited in its books, right? C Limited cease to exist. C Limited cease to exist, right? So the C Limited has been acquired from B Limited and it will get merged into the A Limited itself. This will be a case of merger or amalgamation, right? I hope this must be clear to you guys. Yes or no, guys? Let me know if there is any doubt. All these three scenarios must be clear to you. Okay, let me move on. Another scenario would be transfer of business or entity between the fellow subsidiaries. Transfer of business or entity between the fellow subsidiaries. So this we are talking about group transaction. Right? For example, let's say this is A Limited, this is B Limited, this is C Limited, right? And within this is 100% subsidiary. This is again 100% subsidiary, and C Limited is having D Limited, right? What is the relationship between B Limited and C Limited? It is called fellow subsidiary. Fellow subsidiary, right? What is D Limited? D Limited is step down subsidiary. Right? So this is a group. This is a group transaction. So what is happening in this group transaction? Let's say B Limited is acquiring D Limited, right? So what is the revised structure? What is the revised structure? Revised structure will be like A Limited, B Limited, this is C Limited, and within B we have D Limited. Right? So this is a case of transfer of the subsidiaries or a legal entities or a business within the group. Correct? This is another way of business combination. Right? Let me talk about one more scenario. Merger of subsidiary into parent or merger of parent into subsidiary. Right? This is again a group transaction. What is group transaction? Transaction within the group itself. That means transfer of one entity, transfer of one business to the another business within the entity itself. Correct? So what can be the scenario? Let's say this is subsidiary merger of subsidiary into parent. Right? Let's say this is A Limited. This is B Limited and this is C Limited. These are the 100% subsidiaries. Now in this case, what is happening? B Limited is a subsidiary. B Limited will get merged into A Limited. Right? It is a group transaction. What will be my revised structure in this case? A Limited, and A Limited is only having C Limited, which is 100% subsidiary after merger. So this will be a case where B Limited will get merged into A Limited, where the subsidiary gets merged into its parent. Correct? Another scenario would be merger of parent into subsidiary. Is it possible? Yes, it is possible. I have seen practically. It is possible. Right? A Limited, same structure, A Limited, B Limited, C Limited, 100%. Right? Now in this case, what will happen? A Limited gets merged into B Limited. Right? And C Limited will comes and B Limited will obtain the stake in C Limited. So what will be the revised structure, for example? B Limited holds 100% stake in C Limited. Right? This will be a case where the parent will get merged into the subsidiary. So guys, what we have talked about lots of scenarios. Right? We have talked about lots of scenarios. One is we have said acquisition of one or more of the business. This is the case. In this case, real estate business has got transferred to A Limited, or trading business also get transferred, or the mining business has also got transferred to A Limited. This is the transfer of business. Then we have talked about acquisition of the controlling stake. What is control? Power to control the affairs of the company is a controlling stake. Right? There can be the multiple reasons. There can be the multiple rights. There can be the multiple conditions. What we need to evaluate, and these conditions are in combination. It is not a case of either or. So in this example, we are saying A Limited acquired a stake in B Limited 80%, 90%, 70%, more than 50%. Right? So it is an indicator. It is not a case that I will apply the business combination accounting. It is an indicator. Since I have acquired more than 50%, it is largely possible that I will apply business combination accounting, provided other factors will get satisfied. What are the other factors? Which is defined under Ind AS 110. Which is defined under Ind AS 110. What are those factors? Which we have written in the previous slide. Right? These are the factors of Ind AS 110. correct? Then we have talked about merger and the amalgamation of one or more of the entities, right? So this will be the case: A Limited, B Limited, C Limited. C Limited is getting merged in A Limited. Another case, transfer of business between the fellow subsidiaries. It is a group transaction. Within A, there are two subsidiaries, B and C. Within C, we have D Limited, 100%, right? D Limited is getting transferred, right? It may also possible that we are holding 80%. Even then, we will apply the business combination accounting, provided it should be a subsidiary. It should be a subsidiary, right? And lastly, we are saying merger of subsidiary into parent or parent into subsidiary. This will be the scenario, guys. I hope you have understood the concept of merger, the concept of merger, acquisition, and acquiring the controlling stake. So any type of transaction, any type of restructuring within the group, outside the group, any type of acquisition will fall in the scope of business combination Ind AS 103. One person has asked me a question, sir, we have read AS 14 in Indian GAAP. AS 14 under Indian GAAP. AS 14, right? And Ind AS 103. AS 14 heading is amalgamation, right? This is Indian GAAP, this is Ind AS. And this heading is business combination, right? What is amalgamation? Merger of two or more business or entity, right? This is the only scope of amalgamation. But here in case of business combination, multiple scenario exists. Multiple scenario exist, right? This is the main difference. Scope is limited. Scope is limited only to the extent of amalgamation. Scope is very wide. Sheena has said, sir, this 100 means 100% stake. It can be lower. It can be lower. It can be 80%. It can be 50%, more than 50%, right? But the other factor needs to be evaluated in all the cases. If I'm acquiring 100%, then it means entire control is with me, right? There is no third party who's having a minority stake. Okay, Manjunath is saying, sir, can we get the notes you are writing after the class? Definitely, I am writing for you guys only. Okay, Sairam has raised one question. Sir, if one company acquired the 90% stake in another company who is having lot of different business, then what will be the treatment? Okay. Sairam question or query. Let's say A Limited, this is B Limited. B Limited is having multiple businesses, right? Business 1, business 2, business 3, business 4, correct? Now A Limited is acquiring 80% stake in B Limited at rupees 100 crores, right? Let's say the net asset of all these group, net assets. What is net asset? Net asset meaning assets minus liabilities is equal to 80 crores, right? Now what A is supposed to do? My purchase consideration is 100 crores, right? Net asset acquired at 80 crore rupees. Differential is my goodwill. Differential is my goodwill. Are we clear, guys? Sairam, are we clear? Yes or no, guys? Are we clear with the basic concept of business combination, how it operates practically in the market? What is the meaning of acquisition? What is the meaning of a merger, amalgamation, transfer of entities within the group, transfer of entities between the fellow subsidiaries, merger of parent into the subsidiary, merger of subsidiary into the parent? Are we clear? There are the various different type of transaction possible in case of business combination, but under AS 14, it will be limited to amalgamation. Manjunath is saying, yes, sir, we are getting the points. Thank you so much. Okay. Now let's understand, guys, what is business combination, and then we will understand what is business. Correct? Big question is, what is business combination? Right? What is business combination? So business combination is a transaction, right? Is a transaction where acquirer obtains control over the business or entity. Right? Business combination is a transaction where the acquirers obtain control over the business or the another entity. What is control? We said in the previous section, control is defined. Control is defined under Ind AS 110. Correct? Control is defined under 110. Correct? Now this is the definition of the business combination, right? Acquires obtain the control of the business. So the keywords, everything is moving around a business, right? Everything is moving around a business. The next question is, what is business? Can you guys tell me, what do you understand by the word business? What is business? Anyone? What is business? Sairam has raised one question, but controlling of business is under A Limited or B Limited. After acquiring B Limited, I think controlling of business is under A Limited or B Limited. Okay. So what will happen in this case? Let me also plot the revised structure. A Limited is having how much stake? 80% stake. Then B Limited, business 1, business 2, business 3, and business 4. This is how the revised structure is. By acquiring the stake in the business B Limited, A has actually acquired a stake in B1, B2, B3 only to the extent of 80%. Correct? Okay, now the people are saying business. Business means one person is saying it's a trade profession, sale and purchase, transaction between two parties. No, what I just need to understand here is if I'm saying A Limited is running its business, what is the meaning of that? When we are saying A Limited is running a business, let's say A Limited is an entity and this company is running its business. What do you think the meaning of this business? What is the meaning of running its own business? What do you think so, guys? Think logically, practically. If today I'm saying you guys are going to be a chartered accountant, if I'm saying Mr. A is running its own business, what is the meaning of that? Very good. Sheena said providing goods and services to earn a profit. Very good. 1%. Aditya is saying business is trading of goods or providing services of generating income. So why A Limited is running a business? To earn a profit, to sell the goods and services, to earn an income. Income can be operating activities. Income can be by way of investing activities. Let's say I've invested surplus money into a different business, right? I will be earning interest income. I will be earning dividend income if I've invested my money, surplus money in the equity shares of the different companies or listed company, right? So very good said, very well said by the different people. So they are saying business is running for the purpose of earning a profit. One person is saying business is a trading of goods and services, right? So by these words which you guys have said, let's understand what is the business, what is the definition which is defined in the Ind AS 103. Right? So 103 says, what is a business? Business is an integrated set of activities and assets that are capable or managed for the purpose of A, providing goods and services, right? For the purpose of investment, for the purpose of investments to earn dividend income, interest income, right? Earn profits or other income in ordinary course of business. Ordinary course of business. Right? So what is a business? Business, my dear friend, is nothing but a set of integrated activities and assets. Set of integrated activities and assets for the purpose of providing goods and services. Right? For the purpose of providing goods and services, for investments, to earn dividend, interest income, for earn profits or other income in the ordinary course of business. This is what a business is, right? So what is the objective of the business? To earn profits. What is the objective of business? To earn dividend income, interest income, to provide goods and services. That is what the business is. So that means what is defined under Ind AS 103, we are not supposed to understand that thing. Why? Because we know it is a business. We know what is a business. And what we know is actually defined under Ind AS 103. I'm just trying to correlate what is our existing knowledge in respect of business. See, there are two methods of reading accounting or any law. One thing is that we are reading a law without evaluating whether we understand it in a better sense or a practical sense or not. And the second methodology is that when we are reading anything, we just try to correlate with our existing knowledge, right? If it matches, right, that means this is correct. And it may possible that with our existing knowledge, something is additionally written in that law or in that standard. So we need to understand something additional. It is not always the case that we need to understand irrespective of the fact what we already know. So business, we already know. It's a basic principle, basic meaning, right? General parlance, which is defined under Ind AS 103. Correct? Okay. Now the next is in order to understand what are the different elements of the business. Elements of business. Why we are reading the definition of business? Why we are reading the definition of business? Because the heading of this standard is business combination, right? That means if it is a business and I'm acquiring that business, only then I can apply the accounting of Ind AS 103. If I'm acquiring a company which is not a business, I'm outside the scope of Ind AS 103. Right? So that means whenever a company invests into another company, whenever a company acquires a stake in another company, we need to make an evaluation whether we need to apply Ind AS 103 by evaluating whether the company is a business or not. If it is a business, then I will apply Ind AS 103. If it is not a business, then 103 is not applicable. Then I need to go for another standard, maybe a PPE standard. Or maybe if it is not a PPE standard is not applicable, then I need to apply the general principles, general accepted accounting principles. So it is very, very important, my dear friend, to evaluate whether the investment which I'm making, whether the stake which I'm acquiring, whether that company is a business or not. Right? So the entire concept of business combination, entire accounting of business combination is dependent on this word, whether that acquisition is a business or not. Right? That is why we are reading what is business today. Right? Think about it. We are sitting in CA final and we are reading the higher standards, accounting standard, higher Ind AS accounting standard, which is nothing but a global accounting standard of IFRS, and we are reading what is business. Right? That is the main logic. Why we are reading business? Because the investment which I'm going to have, right? The acquisition of the stake in a company, whether I will apply business combination standard or I will apply asset standard or I will apply any other standard in that case. That is why we are reading business. Right? Okay. What are the different elements of the business? So business has three elements, right? One is input. One is inputs. Second is process, right? One is input, second one is process. When I will combine input and process, when I will apply my process into the input, I will get output. Right? I will get output. So that means for every business, there must be an input, there must be a process, and there should be a output. Right? There must be an input, there must be a process, and there can be a output. Right? I'm using a word must in case of input. I'm using a word must in case of process, but I'm not using the word must in case of output. I'm repeating my words again. There must be an input, there must be a process, and there can be a output. Let's understand these things in detail. What is input? Right? For a business, can you guys tell me what is an input? What is an input? Non-current assets is an input. Right? Non-current assets is an input, like plant, license to run a business is an input. License to acquire, for example, patent, copyright, right? These are non-current assets. Intellectual property rights, IPR, intellectual property rights. Skilled workforce, skilled workforce is a input. Fourth, other material rights. These are called inputs. So that means whenever a company is acquiring another company, right, we need to see whether that company, whether the acquirer is having an employees, whether the acquirer is having a plant, whether the acquirer is having a license, whether the acquirer is having a trademark, whether the acquirer is having a copyright, whether the acquirer is having a intellectual property right, right? So these are called inputs. Input is must, right? Then we say, what is process? Process is nothing but a management process. Management process. Second, operational process, right? Resource process, resource management process. Management process. So it is nothing but a management process. When I will apply these management process into the output, I will be able to generate what? I will be able to generate output. What is the output? Goods or services. What can be the output? Dividend income, right? Interest income, profits, or other income. So these are the elements of the business basis which we need to evaluate whether the acquirer is acquiree is a business or not, right? Sometimes question will, sometimes question as well as the practical scenario says, in respect of the payroll accounting, in respect of the billing, in respect of the invoicing, in respect of the day-to-day accounting, right? If the other company is doing this accounting, question will say, is it a business or not, right? So these are called the admin activities. Administrative activities like day-to-day accounting, bookkeeping, billing, payroll accounting, etc. is not a business, right? Is not a business. It's not a, instead of business is not a input, I would say. Right? So in order to evaluate, we should have these three elements in a business. First element, input. Second element is a process. And third element is output. Right, guys? Administrative activities like day-to-day accounting, bookkeeping, billing, payroll accounting is not an input. One person is asking non-profit organization, right? Again, we need to evaluate on all these parameters, it is a business or not, right? There is nothing scope out. If the objective is to, if it is having an input, process and output, right, it is a business, right? So by using a word business, many things will combine or comes under the purview of business. Okay guys, let me know if there is any doubt in this. Let me know guys if there is any doubt in this. Otherwise we will move further. Are we clear? Okay, now Jay Srivastav is asking, providing bookkeeping services to other. Now it is a business. What we are saying is administrative activities within the organization. I am doing the bookkeeping of my company itself. It is not a business. But my object, I am a payroll company itself, right? Payroll company who provides the payroll accounting of the other companies. Then it is a business. What I'm saying is administrative activities. What we are talking about, administrative activities in this case. Okay, Jay, I hope this must be clear to you. Right? Now we need to do further assessment. This is the main elements of a business. Now we need to do further assessment. Further assessment of business. Now we need to do the further assessment of the business. Now the standard is saying integrated set of activities must consist of inputs plus a substantive process. Right? Integrated set of activities must consist of inputs and a substantive process. What is substantive process? Sheena is saying, sir, you may show the previous page again. So don't worry, Sheena, you will get all these information in this PDF file. Should I move on? Should I move on, guys? Okay. Now the question rises here. What is substantive process? Right? Scenario. There are two scenarios. Scenario 1 and scenario 2. What is first scenario? Where the set of activities of integrated activities where the set of integrated activities does not have the output on acquisition date. Right? Second scenario would be where the set of integrated activities have the output on acquisition date. Right? First day we are saying where the set of integrated activities does not have the output, and in the second scenario we are saying it will have the output. Right? So in this case, the process is substantive if following conditions exist. A, process is capable of generating output. Right, guys, what we were talking about, we are only saying we said that input is mandatory. We said input is mandatory. We said process is mandatory, and we are saying output is optional. Right? Optional means on the date of acquisition it is not available. The company is not generating an output, but the company is having an input process, but output is not generating. Right? So we are saying the process can be a substantive process if the process is capable of generating the output. If the process is capable of generating the output. B, input consists of workforce, which are skilled and knowledgeable. So that means input, there must be a skilled workforce. Workforce needs to be there, which are skilled and which is knowledgeable. Right? C is other inputs, like material rights, intellectual property rights. So basically the definition of the input has been extended by using this word process is substantive or not. So we are saying process will be substantive if it is capable of generating the output. Right? Input must consist of the skilled workforce which is knowledgeable, right? And there must be an other inputs like material and intellectual property rights. Right? So here we are only talking about there may be a scenario when I'm acquiring another company. There may be that company is producing the output on the date of acquisition or not producing the output on the date of acquisition. If it is not producing, then it is capable of generating the output. Right? The input, the company which I'm acquiring, that company is also providing the skilled employees or labor. Right? That company is also providing the IPR. That company is also providing the other material rights. Then I will say by using those inputs, by using that process, I will be able to generate output. And now another scenario will be when I'm acquiring the other company is generating the output on the acquisition date. So in that case, what should we say? The process is substantive. The process is substantive if following conditions exist. What is that condition? process will be able to generate output. Process will continue to generate output. B, process is unique. Right? Process is unique. Ayush is saying, sir, can I join from here? I got late today. Yes, Ayush, you can join. Such process cannot be replaced. Such process cannot be changed or replaced without incurring significant cost. So these are the areas, guys, which we need to understand. If the company which I'm acquiring is a business or not, right? This is the meaning of substantive. What is substantive? What is the meaning of substantive? Practically exist or not? Practically exist or not? I hope this concept must be clear to you. Let me know, guys, if there is any doubt. Let me know, guys, if there is any doubt. If there is no doubt, can we move on? I hope you guys are understanding the concept of business combination. Only Priya is saying, sir, no doubt. What about others? I hope many people are joining the session. Other persons? People are saying, sir, can you provide some examples? Don't worry, we will have lots of examples here, right? Let's understand the concept first. Okay, Manjunath is saying, sir, business combination definition includes earning interest or dividend. So if banking company issues major loan to too many businesses, whether it is a business combination, yes, that is business combination. It may possible I am a company, I am acquiring a stake in a banks. Bank major operation is to provide a loan, right? To earn an income on account of interest. That is a business. Okay. I give you an example. A Limited acquires B Limited, right? A Limited requires B Limited of rupees 100 crores. Correct? Now this B Limited is having only one asset, land, right? B Limited, or this is the balance sheet of B Limited. Land at a rate of, let's say, 90 crores, right? Share capital, cash, 10 crores, 100 crores, right? Only land is there. If I talk about P&L, revenue, nil, right? Maybe interest income, 1 lakh, expenses 20,000, net profit, let's say 80,000. Now just tell me guys, A Limited acquires B Limited at a rate of, at an amount of rupees 100 crores. Do you think it is a business? Do you think it is a business? Is there any input available? Is there any input available in this case? Yes. Input is land, asset. But only vacant land, whether it can I apply any process on this? Is there any management process? Whether B is earning a profit, whether B is providing any goods and services to any third party? Nothing else. Nothing else. There is no process in this case. No process. Whether B Limited is acquired a skilled labor? No, because he is not having any employee. Right? No employee. No skilled workforce. Is it a business combination? Is it a business, or before business combination, is it generating any output? No. Is it a business combination? No business combination. Right? Because A Limited has only acquired B Limited for the perspective of this land. Right? So in this case, we will say this is not a business combination. This will be a case of asset acquisition. Right? This will be a case of asset acquisition. Now guys, we need to understand asset acquisition as well. We need to understand asset acquisition. So if I, for 2 minutes before the asset acquisition, if I talk about, so one more concept have been introduced in the standard couple of years ago. I believe it's in 2020. One more concept have been introduced. That concept is called concentration test. Concentration test. Right? So what we are saying in this test, we are saying if the fair value of gross assets acquired is substantially equal to the fair value of assets, fair value of identifiable assets, or group of assets. Then it is a case of asset acquisition and not business combination. So what this line is saying, if the fair value of the gross assets acquired, is substantially, its word substantially means largely, right? Largely, not defined, practically practically we use 90% or more, right? So what we are saying, if the fair value of the gross assets acquired is substantially equal to the fair value of identifiable assets or group of assets, then it is a case of asset acquisition. So what we are saying, if I'm paying 100 crore rupees, to acquire a company, right? And in that company, there are a couple of group of assets which constitute 90% of more of the amount which I'm paying. Then ultimately, I'm not acquiring a business. Ultimately, I'm acquiring a asset. In this case, what is happening? I am paying 100 crore rupees to acquire this land, right? 90 divided by 100 crores. How many percentage? 90%. So effectively, I have paid 100 crore rupees, right? Which 90% or more, which substantially constitute the value or the fair value of land itself, right? So in this case, it is not a business combination and it is an asset acquisition, right? So this guidance have been incorporated in the standard. If the fair value of the gross asset which I'm paying, right, is approximately equal to or is substantially equal to the fair value of the assets acquired, then it is a case of asset acquisition, not a case of business combination. Now the question is, what is the fair value of the gross assets acquired? The guidance has also been provided by the standard. Fair value of gross assets, right? It means what I'm ultimately paying to the other party. For example, purchase consideration, plus non-controlling stake, or I would say acquisition of NCI at fair value, plus fair value of previously held stake. What does it mean? It means previous investment. If any, right? Plus liability incurred minus any cash and cash equivalent. What else? Minus any goodwill acquired on account of deferred tax liability, right? This is actually the company has paid gross assets acquired. Right? Then we need to compute percentage stake in respect of gross assets in respect of identifiable assets or group of assets, right? So how to be computed? Assets or group of assets. divided by gross assets is equal to the percentage, or I would say multiply by 100%. If this percentage is 90% or more, then it is a case of asset acquisition. And not business combination. Correct? And this concentration test is an optional test. Test is optional test. Right? Fair value of the gross assets. So this is the amount, basically what we are saying, this is the amount which we are paying. This is the amount payable. This is the amount payable to acquire assets. Right? So if this amount is only concentrated to the asset or the group of assets, so we are saying it is an asset acquisition and not business combination. Correct? So Ayush is saying, sir, what if the substantial asset have the capability of generating the output they have? They are supposed to have the capability of generating the output. We are saying the process is substantive. Process is substantive only when the process is capable of generating the output. It's not a question of if and but. It's a matter of clarity. The process have the clarity to generate the output. Right, guys? So how to apply the concentration test? This is the methodology, that this is the amount which I'm going to pay. This is the amount which I'm going to pay in order to acquire the assets. What all needs to be done? Purchase consideration, right? If I'm acquiring NCI, if I've already done an investment in the company in the past, let's say I have already made a 20% investment in the company. Now I am acquiring 60% more stake. Now I am acquiring 80% of more stake. So the पहले जो investment करी थी उसकी fair value. If I'm incurring a liability in order to acquire that business, then that is also needs to be included. But at the time of acquisition, when I'm acquiring that business or an asset, I am also getting certain cash in the books of the other company. Certain cash and cash equivalent is sitting, right? So that means I'm paying 100 crore rupees, but I'm getting 5 crore rupees in cash because I am acquiring the entire company, right? So I will reduce that. If the other company is having a goodwill in its books of accounts, which has been created because of the deferred tax, then I will reduce that as well. I will reduce that as well, basis which we will compute this gross asset. Then this gross asset needs to be computed in terms of percentages. Then we will say if it is substantially equivalent, which is 90% or more practically, then we will say it is an asset acquisition, otherwise not. Right? This is the practical. Practically we consider 90%, right? But judgment is also required. Correct, guys? So Jay Srivastav is saying some figures are added, some figures are subtracted. What I'm saying is, Jay, if you look at, I have used the word received, right? Goodwill acquired. Right? This is a received. जब मैंने बिजनेस एक्वायर किया उस बिजनेस में ही, या मैंने कंपनी एक्वायर करी उस कंपनी के अंदर ही कैश पड़ा हुआ था, वो मेरे को कैश मिल गया, तो अल्टीमेटली मेरा आउटफ्लो कितना हुआ? दिस इज माई आउटफ्लो, दिस इज माई आउटफ्लो. This is outflow and this is inflow. That's why we are reducing this. Okay. Aditya saying, sir, how the scenario 1 and 2 which were explained earlier are related to the concentration test? If the scenario confirms it is a business, do we have to further apply concentration test? Practically, yes, we apply, we check this concentration test, but the standard is itself saying this is an optional test. Standard is itself saying this is an optional test, but practically when we are on the ground, when we are doing this kind of evaluation, we apply concentration test as an additional measure. Whether it is not the case, the company is paying only for an asset or a particular group of assets. So it's always recommendatory to apply this test. Right? Okay, guys, people are also saying that we should take a break. So let's take a break for 15 minutes. Then we will come back. Okay, let's take a 15 minutes break. And I'm hoping, guys, you're enjoying the basic concept of business combination and India's 103. Right? In the second half, we will also discuss a couple of questions on business combination only on the concept which we have understood. Right? Okay, let's take a break for 15 minutes. Okay. Okay, guys, let's restart. Okay, let's take a couple of questions, guys, of the study mat. Question number 2, page number 13.16. Right? Question number 2, page 13.16. So company A is a pharmaceutical company. Since inception, the company had been conducting in-house research and development activities through its skilled workforce and recently obtained an IPR in the form of patents over certain drugs. The company has a production plant. Let me open this, page number 13.16. So we are talking about this question. Company A is a pharmaceutical company. Since inception, the company had been conducting in-house research and development activities through its skilled workforce, recently obtained an IPR as well in the form of patent. Right? So company A Limited, right? So this company is having what? So this company is doing research and development activities, right? This company is also having skilled workforce, and recently obtained IPR, intellectual property rights, right, in the form of patents. So it's a pharma company. Correct? Company has a production plant that has a recently obtained regulatory approval. So production plant this company is also having. Correct? Regulatory approval company को मिल गई है. Regulatory approvals. However, the company has not earned any revenue so far and does not have any customer contract for the sale of the goods. Company B acquires company A, right? So in respect of the output, no output on acquisition date. Correct? No output on acquisition date. Company has not earned any revenue so far, does not have any customer contracts. No customer contracts. No customer contracts. Right? Company B acquires company A. Now in this case, what is happening? There is another company called B Limited. This company is acquiring A Limited. Right? So the only point is whether this A Limited is a business or not. What the question is asking, does company A constitute a business in accordance with Ind AS 103? What is the question here? A Limited is a business or not? Is a business or not? What do you think so, guys? Is this a business combination or is it something different? What is your view? Is it a business combination? Yes or no? Right, so let's evaluate. What are the different elements? Elements of business. Input. What are the inputs available here? This is process is equal to output. What are the input available? The skilled workforce is an input. IPR is an input. Production plant is an input, right? So what are the inputs we are having? So we are having skilled workforce is an input. Skilled workforce is an input. Second, production plant. Production plant is an input, non-current assets. IPR is an input, right? What is the process? Now we need to evaluate management process. Now we need to evaluate management process, right? So company must be having operational process, strategic process, and resource management process, right? Currently no output is there, right? Now the only point is when the company is having all these parameters, when the company is having all these outputs, right? By using the skilled workforce, by using the IPR, right? He is also having a regulatory approvals. Regulatory approvals. Can the company generate the output? Can the company generate the output? Yes, company can generate the output in future. Therefore, we will say this is these inputs. These inputs. What should we say? The process when applies to these inputs, they are capable of generating outputs. Then it is a business. Then it is a business, right? So let's read how it is drafted. The definition of the business. The definition of the business requires the existence of the input and process. In this case, a skilled workforce, manufacturing plant, IPR, along with the strategic and operational process constitute the input and process in line with Ind AS 103. When the said input and process are applied as an integrated set, the company A will be capable of producing the output. The fact that company A currently does not have the revenue is not relevant, right? Basis this, company A would have been able to obtain the access to the customers that will purchase the output. Hence, in the present case, it will be a business as per Ind AS 103. Correct, guys? So what we are saying, it is a case of business here, right? But the question arises, how to draft my answer in the exam? How to draft answers in exam, right? It's not only for accounting, it's for everything, right? The answer should be in such a manner. The step number 1, I believe I have explained this in the financial instrument standard, right? Step number 1, background of transaction, correct? Step 2, technical guidance, right? Step 3, evaluation. In this evaluation, sir, how do we need to evaluate? Very simple, we need to evaluate the facts. Need to evaluate the facts with guidance, right? And step number 4, conclusion. This is what the methodology we also follow practically, right? If we need to evaluate a combination, deferred tax, financial instrument, we prepare accounting memo in the Word file in this particular format itself. and this is the right way of presenting in the exams as well. I hope am I clear? Right, guys? You can also prepare these diagrams that will make your answer different from the other participants, right? Include guidance, include diagrams, right? Not in the technical section, in the evaluation. Include diagrams, flow charts, right? This will make your answer different from the other person, right? Similarly, this is the format which, let's say, I have drafted here, right? It's all about the understanding. It's not a case you need to produce the same format of diagram or the flow chart which is presented in the module. It's not possible to remember everything, right? You need to draft, you need to prepare, you need to practice in such a manner that you can prepare these diagram by yourself. Correct, guys? This is the way how we need to draft our examples in the exams, draft our papers in the exams. Okay, let's read another question. Question number 3, page number 13.17, I believe. Yes. Question number 3, page number 13.17. Okay, guys, what we are saying, modifying the above illustration, which is illustration number 2. If the company had revenue contracts, so what we were saying in the previous example, B is acquiring A Limited, correct? B is acquiring A Limited. If A Limited, in the above example, if A Limited had the revenue contracts, now in this case, what we are saying, A Limited is having revenue contracts. Okay. Sales force, such that B Limited requires all the input and process other than the sales force. So here we are saying, now in this case, A Limited was having IPR. A Limited was having IPR. What else they were having in the previous example? Right. So A Limited is having Salesforce. A Limited is having plant, regulatory approvals. Correct? Regulatory approvals. Now, if company A had revenue contracts and sales force such that B acquires all the inputs and process other than the sales force. So in this case, now B Limited is not acquiring sales force. B Limited is not acquiring sales force. Why B Limited is not acquiring the sales force? Because it may possible that B Limited is also having its own sales force, right? So in that case, there is no need to acquire the sales force of the other business. Even in that case, it is a business, yes or no? Yes or no, guys? It may possible. Let's say I give you a practical example. Pine Lab. Right? And this is Quicksilver. Pine Lab and a Quicksilver. So when you guys go to the departmental store and purchase anything, and you are paying the payment through the card, through the credit card or debit card. So generally you see the machine in which the departmental store is swiping. That machine generally pertains to Pine Lab. Right? Couple of years ago in 2020, Pine Lab has acquired Quicksilver. Right? It is a technology company. It is again technology company. Right? So it may possible that the acquiring company, this is the acquiring company, acquirer. and this is the acquiree. In 2020, Pinelab has acquired 100% stake in Quicksilver, right? Both are the technology-based company, right? So if I am a technology-based company and I am acquiring another technology-based company, so is it necessary to acquire the sales force? May or may not be. May or may not be, because I'm acquiring a business. But in order to run a business, I'm already having a sales force in my business, because my business and the other business are same, right? Similarly, in this case, what is happening? A Limited is having a sales force. B Limited may be possible in the same business and is having the similar same sales force, which have the similar set of skills, knowledge, experience. So is it necessary to acquire the sales force? Answer is no. The only point is we should have an input. So input I'm not acquiring, but I'm having that particular input in my organization. In that case, this is also a business, right? Let's read the answer. Though the sales force has not been taken over, however, if the missing inputs, for example, Salesforce, can be easily replicated or obtained by the market participant to generate the output, it may be concluded that A Limited has acquired a business. I can take the Salesforce on a cheap amount from the market and I can generate the output, right? Company B is also into the similar line of business. If company B is also into the similar line of business, the existing sales force of the company B may also be relevant to mitigate the missing input. In accordance, this forms a part of business. Ayush is giving a HDFC example, right? So good, Ayush. So guys, the only point which I am highlighting here is it is not the case that we are acquiring all the inputs. It may possible that we have that inputs already in my organization. I can use those inputs to generate the output. Are you guys with me in respect of what is business combination, and how this is to be evaluated? Yes or no, guys, quickly. Yes or no? Okay, let's do one more question, guys. Now it's an example. Example 1, page number 13.12. It is based on concentration test. Correct? Okay. Let me show you where we are. 13.12. Right? So we are talking about concentration test, this example. Okay, A Limited holds 20% stake in B Limited, right? That means A Limited has already invested in the past in B Limited 20%. Now subsequently, A Limited is further acquiring 50% stake in B by paying 300 crores. So let's say A Limited and this is B Limited, right? A Limited was already holding 20% stake. Now A Limited has acquired 50% stake in B Limited by paying 300 crores. Correct? By paying 300 crores. Now the fair value of acquired assets and liabilities is given: building, acquired assets and liabilities. So building 1000 crores, cash and cash equivalent 200 crores, right? Financial liability 800 crores, and deferred tax liability 150 crores, right? So A Limited is paying 300 crores, right? This is what? Net assets. This is 950. This is 1200. So this is 250 crores, right? So in fact, 300 crores have been paid for acquiring a net asset of 250 crores. In a nutshell, that a company has paid 50 crore rupees extra. It may be on account of goodwill, it may be on account of any other intangible, but goodwill needs to be computed only when it is a business combination, right? But if it is an asset acquisition, goodwill is not to be computed. Immediately after this example, we will understand what is asset acquisition, what is the difference between a business combination and asset acquisition, right? But as the question is saying, the company has acquired 50% additional stake. This is the original stake, and this is the additional stake which has been acquired by paying 300 crores as a purchase consideration for acquiring a net assets of rupees 250 crores. That means 50 crore rupees has been paid extra. Now further question is saying the fair value of the entity B. B की जो fair value है, that is 400 crores, correct? And the fair value of NCI is 120 crores. Correct? Fair value of the NCI is 120 crores. The fair value of the entities A previously held stake, which is 20 crores, this one. The fair value of this 20 crores is nothing but 80 crores today. Now A need to determine whether the acquisition is an asset acquisition as per the concentration test or not. Right? So what we said there are a couple of steps. Step 1, compute. Okay, one person, Manikanta, is asking NCI. NCI full form is non-controlling stake, right? Non-controlling stake. What is NCI? Let's say this is A Limited is holding 80% stake in B Limited, right? And this 20% stake is held by C Limited, right? So who is the majority holder? A Limited is the majority holder. Majority holder. And who is C Limited? C Limited is the minority holder. This minority holder is called non-controlling interest, right? Who is controlling interest? A. Who is controlling? A is controlling interest, and this C Limited is non-controlling interest. Are we clear what is NCI? Manikanta is saying not full form. Manikanta, I have explained the concept. I have not explained the full form. It is a concept which I have explained. This is NCI. Concept of NCI, right? In the Indians, we will use the word NCI. Under Indian GAAP, we use minority interest, right? Under NDS, we use non-controlling interest. That means those shareholders who are not the controlling shareholders of the company. Are we clear, Manikanta? Are you guys clear what is the meaning of NCI? Yes or no, guys? Okay. Now let's move to answer of example 1. Step number 1, computation of gross assets. Step 1, computation of gross assets. Right? First is purchase consideration. That means kitna amount I will pay to acquire that net assets. Purchase consideration. Right? Purchase consideration is 300 crores. Then NCI fair value. NCI fair value is 120 crores plus fair valuation of previously held stake. That means previous investment. What is the fair value? 80 crores. Right? This comes out to be 500 crores. Correct? Then in the asset side, I am receiving cash. Cash received. I am actually going to transfer 500 crores basis these transaction, but I am also receiving 200 crores. Right? Plus, I am assuming a financial liability as well. Financial liability as well, which is 800 crores. Right? So this comes out to be 1100 crores. 13 minus 2, 1100 crores. So this is the gross assets. Right? Now, this amount is actually I'm paying in a different form. Some in the form of cash, some in the form of NCI, some in the form of previously held stake, right? Some in the form of the acquiring a liability, right? This is the amount paid or payable, amount paid or payable to acquire identifiable assets or group of assets. Identifiable assets or the group of assets. Right? Now in the step number 2, step 2, compute percentage in respect of assets or group of assets. Right? In this example, if you see, I'm acquiring a building. Right? I'm acquiring a building. So what is the value of building? 1000 crores divided by assets. How this needs to be computed? Or group of assets divided by gross assets multiply by 100. So what is the assets which I've acquired? I have acquired building, which is 1000 crores. What is the amount of gross assets which we have computed? 1100 crores multiply by 100. This is coming to 1000 divided by 1100, almost 90.9%. Right? Now in this example, this 90% is substantially, this 91% is substantial, concentrated to the fair value of building. That means I am actually transferring 1100 crores in order to acquire only 1000 crores of building. So ultimately what I'm paying, this is nothing but I'm paying for a building. Therefore, such acquisition is an asset acquisition and not business combination. Any doubt in this example, guys? One person, Ayush, has raised a point, sir. What about DTL? DTL is only a notional entry. We will not consider defer tax, right? We will not consider these defer tax. It's a notional accounting entry. Any doubt, guys, in this example? Any doubt, guys, or should we move on? Happy to have your doubts. Okay, Manikanta is saying if it is less than 90%, then judgment is also required whether it is not a business combination or whether it is an asset acquisition. It depends upon case to case. Now let's say if I say it is coming out to be 89%. So whether 2% will change my entire concept? Answer is no. Right? Practically substantial word has not been defined. Right? Substantial word has not been defined. In the previous, when we were talking about concept, what we have said, substantial, not defined. Practically, we use 90% or more. Right? If it is coming out to be 89%, judgment is required. I am not saying it is going to be a business combination in that case. Judgment is required, subjective. Correct? Okay, let's move on, guys. Now let's talk about, we have talked about business combination, right? What is business combination? So whenever a person uses the word business combination, what comes to our mind? Goodwill or bargain purchase gain. How goodwill or bargain purchase gain is to be computed? Purchase consideration minus net asset acquired. Correct? Okay. Aditya is saying, sir, we are considering 1100 crores to acquire a building, but why not cash? Okay, very good question. If you look at, we have reduced cash in the computation of 1100. Just see. Otherwise, it would have been 1300. We have reduced cash. This is receipt. This is payable. This is payable. Right? This plus this, 500 plus 800 is equal to 1300, right? Minus. So 1300, if we compare 1300, this is my gross asset, let's say, right? Building is 1000 plus cash is 200. This is 1200. Again, we have a 100 crores difference. Again, here we are saying there is a difference of 100 crores. This is one and the same thing. Nothing different. Are we clear, Aditya? Okay, Sairam is saying, sir, we are paying only 300 crores. 300 crores we are paying only in cash or bank. Right? But just by paying 300 crores, whether I'm acquiring 1000 crores balance building, no. What the standard is saying that we need to evaluate what we are paying for NCI, what we are paying for the previously held stake. Uski fair value bhi to change ho gayi hai. So ultimately, what I'm paying is not only for the building, but what I have actually paid in the past as well. The fair value of those numbers will also constitute in order to evaluate the gross assets. Right? We are doing apple to apple comparison. The fair value of the previously held stake, the fair value of NCI today, right? The fair value of the liability which I'm assuming today, right? If I'm receiving my cash today, if I'm receiving some cash from the other side, I am reducing and then I'm comparing a building. It is a one-to-one comparison, guys. I'm not sure what's the harm in this. I hope this should be okay now. Okay, let me move on. Let me know if there is still any doubt on this particular concept. Any doubt, guys? Okay, let me move on. Asset acquisition. So Aditya is saying, so in the computation of the gross asset, can we ignore the cash receipt and say there are 300 crores payable to acquire a building? Yes, you can say to understand the concept, right? But since the methodology has been defined in the standard itself, we need to go on the basis of the same, right? So you need to compute 1100 crore rupees by the reduction of 200 rupees of cash, and then we need to compare because that has been designed in such a way. Correct? But if you do like this, answer is not wrong. This is the method of understanding, and the same basis we need to do practically. Okay, asset acquisition. What is asset acquisition? First of all, asset acquisition means acquiring an identifiable assets or group of assets, right? Asset acquisition is not a business combination. No goodwill or bargain purchase gain to be recognized in case of asset acquisition, right? Transaction cost like transaction cost to be capitalized in the value of assets. What is transaction cost? Guys, can you give me an example of transaction cost? I believe we must have read in financial instrument standard what is transaction cost. Incremental cost. Any examples of transaction cost? Brokerage, commission, stamp duty, registration fee, any legal cost. These are called transaction costs. So what we are saying is asset acquisition means acquiring an assets or a group of assets. It is not a business combination. No goodwill or bargain purchase needs to be recognized, and the transaction cost, if we have, that needs to be capitalized. What is transaction cost? Incremental cost. Incremental cost to enter into a transaction. Enter into a transaction. Right? Are you saying commission, stamp duty? Yes. Now, what is the difference between business combination and asset acquisition? Let's say this is business combination and this is assets acquisition. First is, for example, goodwill or bargain purchase gain. Bargain purchase gain. So we recognize goodwill or bargain purchase gain. Correct? Manikanta is asking what is identifiable assets. Identifiable asset means particular asset. For example, I am acquiring a building, I am acquiring a land, I am acquiring a plant. Right? Not recognized. Second, transaction cost. Under business combination, transaction cost shall be charged to P&L. Transaction cost shall be capitalized in the value of assets. Right? Third, contingent consideration. To be considered at fair value for computation of goodwill. right? And in this case, not to be considered. Can you guys tell me what is contingent consideration? What is contingent consideration? Additional amount payable on achievement of some conditions in future. Additional amount payable on achievement of some conditions in future. For example, sale will reach to, let's say, 2x after 3 years. That means अगर आज 100 करोड़ की है तो 2-3 साल के बाद वो 200 करोड़ की हो जानी चाहिए. EBITDA will reach to 1.5x after 5 years, right? Acquiree will be able to obtain license in next 6 months, right? So if these conditions exist, then additional amount is payable. That is called contingent consideration, which is dependent on the occurrence and the non-occurrence of the future events, right? Which is dependent on the occurrence means or dependent on the occurrence or non-occurrence of future events, right guys? So Manikanda is also saying one of court case also include possible. So we are talking about contingent liability, right? Contingent liability that will also be a part of contingent consideration. If the lawsuit, if the other party acquiree will win this case, then the company will pay additional amount. That is also a contingent consideration, right? So we have talked about 3 things guys here. Goodwill, bargain purchase. In case of business combination, we recognize goodwill, but in case of asset acquisition, we don't recognize goodwill. Transaction cost charged to P&L. Transaction cost will be capitalized. Contingent consideration. So we will consider contingent consideration for the purpose of goodwill, not to be considered. What else? This is business combination. This is asset acquisition. Measurement principles. Measurement of assets and liabilities or initial recognition, right? This will be at fair value, right? It will be on the basis of allocated cost, on the basis of fair value, right? Allocated cost on the basis of fair value. Right? Applicable standard Ind AS 103 and Ind AS 16. What else we are having? We have talked about goodwill and intangibles. Okay, hidden intangibles. Hidden intangibles to be identified and recognized. Example, internally generated brands, customer list, correct? Not to be recognized. Defer tax to be recognized. Right, so these are the differences between the asset acquisition and a business combination. Right, so in the fourth case we are saying it needs to be recognized at fair value, all the assets and liabilities. It will be on a allocated cost. We will understand what is the meaning of allocated cost here. Applicable standard 103 and Index 16. Hidden intangibles in the business combination, as I said earlier, we need to identify the hidden intangibles. Hidden means which was not recognized in the books of acquiree. Why? Because standard does not permit. For example, internally generated brand. Today I can say that I am creating my new company and it is having a 10,000 crore brand in the name of AJ, let's say, in the name of Amit. I am having a 10,000 crores brand. So whether it is allowed, it is not allowed, right? It is a fictitious asset, right? Which does not have any value, but it may possible. So internally generated brand is not allowed to be capitalized. But when I am purchasing other business, so it has a market reputation, it has a brand in the market, so I need to get it fair valued. I'm paying goodwill, I'm paying additional money for that brand as well, right? So I need to get valuation done for that brand, right? And in this case, no intangible needs to be recognized. Deferred asset, deferred tax to be recognized, and in this case, not to be recognized. One person is asking, sir, what is the meaning of allocated cost? I said we will understand by way of an example, right? Let's take an example. A Limited acquires B Limited. A Limited acquires B Limited, right? B Limited is having, let's say, land 1, land 2, right? A Limited has acquired B Limited. Purchase consideration is 10 crores. Transaction cost 2 crores, right? And the fair value of this land is, let's say, 4 crores and 4 crores. Correct? Now, if scenario one, if the transaction is a business combination, correct? So then what is the accounting in the books of A Limited? Purchase consideration is 10 crores minus net asset at fair value, which is 8 crores. My goodwill is 2 crores, right? Transaction cost of 2 crores, which is this one, needs to be charged to P&L. What is the journal? What is journal in this case? First, net assets debit 8 crores. 2, purchase consideration 10 crores and 2 crore is on account of goodwill. Correct? This purchase consideration needs to be discharged later on to cash, to equity, or this is the way this will be discharged. And the third is transaction cost. P&L debit to bank of this 2 crore rupees. Discharge of purchase consideration. This is acquisition accounting. Are we clear, guys, with the business combination accounting? Yes or no? Yes or no, guys? Okay. Now, if it would have been a scenario 2, if transaction is an asset acquisition, right? So what is the total amount paid? Total amount paid. One is purchase consideration 10 crores plus transaction cost in the form of brokerage. This is 12 crores. Right? Now allocation of total consideration in the value of assets. Right? So I have land 1. I have land 1 and land 2. What is the fair value? 4 crores, 4 crores, 8 crores. Right? Consideration paid. What is the amount of consideration? 12 crores. Can I allocate this consideration in the value of land? 4 divided by 8 multiplied by 12 crores. 4 divided by 8 multiplied by 12 crores. This is coming out to be 6 crores. This is coming out to be 6 crores. Right, guys? So this is called allocated cost. Allocated cost on the basis of fair value. Are we clear, guys? What is asset acquisition? What is business combination? Asset acquisition, we are not capitalizing goodwill. No goodwill. Key points in asset acquisition. No goodwill or bargain purchase gain. Correct. Second, transaction cost to be capitalized. Third, no deferred tax. Fourth, consideration is allocated to the assets. Right? This is what the asset acquisition is, and this is what the business combination is. Now tell me guys, if you have any doubt here, what is purchase consideration, what is business combination and asset acquisition? Quickly guys, let me know if there is any doubt. Any doubt guys? Then what is the homework for the next class guys? Read and understand today's concept. Read module. Right? Example number 1. Example 1. Example 2, 3, 4, 5, 6, and 7. Right? And illustration number 1. So Manikanta is asking, sir, are you going to complete the entire business combination chapter? Yes, my dear friend. Business combination, yes, in entirety. Right, guys? So what we have understood, let me go back from where we have started. We have discussed lots of things. What we have discussed actually, we have discussed what is business, we have discussed what is business combination, we have discussed what is asset acquisition, and we have also discussed what is the difference between the business combination and asset acquisition. Correct? And in the next class, we will start with accounting of business combination. Right? Methods of business combination and detailed accounting of business combination. Today's class, I have only told you the basis, the basic accounting principles of the business combination, but in the next class, we will discuss in detail. In the business combination accounting, we need to discuss the entire concept of business combination. Right? Okay, so Manikanta is saying, sir, I'm writing notes with you. I'm slow. So don't worry, Manikanta. You will get, I will share this entire file, with ICI, and you will get the entire sheet on their web link. Right? So don't worry. If anything is missing, you will get as it is without any changes, what we have discussed in the class. Right? Let me go to the last page for your reference. I hope, guys, this is clear. Should not be a challenge in understanding. Okay, Manikanta is saying also take the consolidation as it is not in the index of the classes. You will get to know from the updated index, guys. It's not in my hand to take all the classes. Right? Okay. So we will meet in the next class, guys. And this sheet I will share with the ICIT. Correct? Thank you so much, guys, for your patience today. And I hope that you have understood the basic concept of business combination today. Right? this is not only important from exam but also from practical aspect perspective. When you guys become a chartered accountant, go in the market, and the company is going to do a business combination, so you should know how to account for that combination in the books of accounts of the company. Correct, guys? Thank you so much for your patience today. Thank you, guys. Thank you, Nisarg, for your support.